Are you interested in investing in industrial or warehouse commercial real estate? Watch this video to learn about the different asset types and which one is right for you. Ron from Ronald Rohde Law, and today we're going to be continuing this series about industrial commercial real estate. We're going to take a deep dive into the different types of sub-asset types within industrial and warehouse, and talking about some of the different features and what is right for you as an investor. We're going to go through the main different types between industrial and the demand that is fueling this post-pandemic craze for industrial, as well as some of the general macroeconomic factors surrounding industrial as an asset class. So in addition to COVID and showing its resiliency in that the warehouses not only stayed open, but it's that one asset type that experienced tremendous demand and growth in e-commerce. More people were staying home, they were ordering goods online, and that increased demand for retailers and different fulfillment centers to stock goods in warehouses. Now, we're all familiar with this decline of the retail environment and commercial real estate for retail. That buying power is now shifting online. And in particular, what COVID has shown us is that it is allowing new consumers to test out e-commerce. And what I mean by that is X percentage of the population is using e-commerce, but it's not 100%. And for example, there's one demographic, Hispanic market, they have not traditionally had as much penetration in e-commerce. They were around 40–50%. With the pandemic, they increased their penetration to where 60–75% of this demographic was now trying out the Amazon, trying out online shopping. And once you practice something, you realize how convenient it is, and you may return to it. That is a stickiness, that is a change in consumer patterns that is going to stick around. So as a growth outlook, there is tremendous room for growth with increased penetration and higher demand throughout the country. In addition, every distributor wants their own shipping hub. So instead of just shipping or selling your goods through Amazon or a third-party logistics center, a lot of the major retailers want to control that distribution and fulfill locally. And that means more regional warehouses, larger mass distribution centers, and everybody, this is Nike, Adidas, Under Armour, they're all adding their own distribution and fulfillment for online shopping. Now, let's talk about some of the economics. We hear about all this demand, but is there supply that is being built to match it? Because if there is enough supply, you're not going to see an increase in rents. And the answer to this question is really interesting. A lot of the new product is all 100,000, 200,000, or 300,000 square foot buildings. These are massive, massive buildings. We call them, the bomber type buildings. They look like a hangar for aircraft bombers. That type of new construction is not competing against any product that is 100,000 square feet or less. Anything that is older and doesn't have 30-foot clear heights, you're not going to be necessarily putting pressure on the existing rents of your building that you invest in. Let's talk about management. Industrial and warehouse users are some of the most hands-off and low-maintenance types of tenants. Certainly compared to office or multifamily, where people are coming in every day and they have a high level of expectation, depending on the class type, Class A, Class B, those types of tenants are pretty needy. They're going to be talking to you every single day if there's a problem until it gets fixed. On the other hand, industrial and warehouse users, they tend to be a little bit dirtier. They have a greater margin of error. As long as things work, as long as the gates work, the driveway is functional, they're probably not going to bother you. And so that's good. If you're a passive investor and you're not necessarily looking to produce hands-on, visiting the property every day, industrial can be a great tenant base as long as you fulfill the obligations of your lease. Let's talk about some subtypes within warehouse. I think that a lot of people just say, I want to invest in warehouse, but what type of warehouse? If we look at something like a small bay, this is a small bay multi-tenant, you're going to have a lot of the lower rents. This could be a typical tenant of like a lawn care company. You may have plumbing, a small truck being stored, minimal supplies. But these are the types of tenants that come and go. You know, they're signing 1 to 3 year leases, just testing it out. But again, the cash flow is there, the yields are there. As long as you actively manage the property and maintain a steady stream of incoming tenants. These can be great investments with a very high cash yield. Flex buildings are another great type of property. A flex building is typically a large single-story building. It may have a 10, 12, 14, 16 foot clear height and has usually a higher percentage dedicated to office versus a large single-tenant building. They may have a smaller build-out of office, but flex is considered clean goods. So these will be storing t-shirts, apparel in cardboard boxes, and you may have a small showroom in the front as well as some office space for sales and accounting. So you can run that type of reshipping business out of a flex warehouse. In addition, you may have some restaurant, you may have food prep. I know that ghost kitchens are very popular right now, and they are all zoned appropriately for most flex buildings to have a ghost kitchen or a catering type business where you're coming in the morning, preparing large quantities of food, and then distributing those out throughout the area. Flex is another one of those that requires a high level of hands-on property management. The leases vary, and some will be net, some will be triple net, and you may even get some small executive style warehouse tenants who want a gross lease. So these would be the highest dollar per foot, but it's a gross lease, and so the property owner is responsible for paying their share of the electricity, utilities, property taxes, etc. So let's talk about some of the different ways to analyze what your target asset type should be. We're going to look at a variety of factors such as clear height, and the older buildings tend to have a lower clear height. So for example, it wouldn't make a lot of sense for you to say that you're looking for a 28 foot clear height or a 22 foot clear height on a 1960s vintage. They just didn't produce, or they didn't build a lot of those buildings, and so those types of parameters are a little bit inconsistent. If you're looking at a 60s vintage, they're probably only going to have a 10 or 12 foot clear height, which limits the types of tenants and the type of use that you can have. In addition, we're going to look at access. Having dock high doors or suitable for a truck to back up, that's really important for expanding the tenant base if they're going to have dock high doors. And not just having one door, but multiple dock high doors allows multiple trailers to park, load, and unload at the building simultaneously. In addition to the access, you'll have dock high, you may have roll-ups, you have man doors, and you want to look at the parking. You want to look at the truck court, because now if you have dock high and you're going to be accepting trailer traffic, how easy is it for trucks to enter, turn around, and can they easily maneuver past other tractor trailers simultaneously? Another important thing to consider is what the beam spacing. You'll have columns, and especially in older buildings, the column spacing really dictates how much utilization of the floor space can you achieve. And so depending on the building and the age, if the columns are narrowly spaced, you're going to limit how much usable square footage of the warehouse space you can actually use. So all of these numbers factor into what the actual tenant is willing to pay for this particular building. In addition, a lot of the new tenants really rely on Wi-Fi. You may have RFID, you may have Bluetooth signal, and depending on the building construction and where walls are located, that signal, that electronic signal may not pass through the walls as easily, and so you're going to have limited connectivity in today's modern age. Again, all of that impacts who your tenants are, how broad of a base, and what they're going to be willing to pay for rent. Maybe they can compensate with extra repeaters, but again, that costs money, it takes time. If it decreases reliability, it's going to decrease the rent that you can charge for the space. An alternative to having columns is to have a truss style, and that has some physical or some geometric limits based on the steel construction, but these types of buildings are completely open span, and it kind of looks like a barn inside, but this way you get a completely open floor plan without having columns. Again, there are trade-offs, and you're going to be limited in some of the size of the buildings, but if you have a smaller size building, you're going to be able to fit a 25,000 square feet of completely open floor space. These again are good for barns, or I've seen them a lot now for riding competitions. So if you have a rodeo or some type of competition where you have a center stage, you can't have columns in the middle of a field, and so a truss style barn is absolutely critical.
Tilt wall?
Tilt wall, that's the final category. You know, if you're looking at a building that is tilt wall construction, they generally tend to be newer. This is a newer construction style, and these buildings are massive. They're typically located in an industrial park. You may have a single tenant or a few large tenants, but these are going to command the highest dollars, highest rents, and turn around the highest valuation. So if you're looking for a tilt wall, expect to shell out big bucks. Well, that wraps it up. You know, I think that I've gone through a lot of different details about the property types. For you as an investor, it's really just important to understand what level of management do you want, what level of capital are you willing to invest, not only for a down payment, but also in reserves, because the older buildings will require larger capital expenditures for, say, replacing the roof, plumbing, driveway, new electrical systems, and these all are fairly significant costs that if you don't have the reserves committed between yourself or your partners, it can cause a cash crunch and cause problems. But I would say that between the level of active management, how involved you want to be on the tenant leasing, what you're willing to do in terms of tenant improvements, and what your return expectation is, you should be able to find a product within industrial and warehouse that fits your needs. And feel free to contact us. We'd love to walk you through a free consultation. If you like this video, smash that like button and subscribe for more content on industrial commercial real estate.